Good day, Junior Tickies. I'm Ms. Brimacombe. We are going to look at Paper 1, Question 1, Statement of Financial Position. Now, we are going to break down this question into smaller videos. First, we are going to focus on how do I approach this question. If you look at the question, it says required. Refer to information B. Calculate the value of your closing stock of formal suits that was omitted from the stock sheet on 30 June 2021. So take note of how FIFO, inventory systems, how we evaluate our inventory is incorporated into financial statements. If you look at question 1.2, it says refer to information C. Use the table provided to calculate the correct net profit after tax for the year ended 30 June 2021. Indicate plus for an increase or minus for a decrease. Now, if you look at question 1.3, it now says refer to information A to H and complete the following on 30 June 2021. The retained income note and the statement of financial position, the balance sheet. So this means that if I'm doing adjustments, we not only need to look at what is the corrections that need to be made when calculating the correct net profit after tax, but also what influence will that have in your balance sheet. So when you're doing this question, make sure while you're completing adjustment, at the same time, make the changes in or record the transaction in the financial statement of financial position. So we will now first focus on completing the adjustments. If we look now at question 1.1, refer to information B. Calculate the value of the closing stock of formal suits that was omitted, it means left out, from the stock sheet on 30 June 2021. Using FIFO, it means that we need to use first in, first out. So on your answer booklet, you would have the workings and then your final answer. So when we're looking at first in, first out, it means that my older stock would have been sold first. So when we value our stock, it will be valued at the most recent purchases because those which were purchased first would have been sold first. So we're working from the bottom up. But now be very careful. If there were returns, you need to look at when were those items returned. So if we start with how many units do we have left over? We've got 240 left over. From the stock which was purchased in May, 24 units were returned. So when we're looking at the May purchases, we've purchased 250 units. Of that, 24 units were returned. So it means that there's only 206 available for sale. Because the older stock was sold first, it means that all of those units, 206 units, is left over. The purchase price was 2,850. So we need to say 206 times 2,850. Now, remember that we've got 240 units left over. Of that, 206 was left over from the May purchases, which means now we need to look at February. 240 minus 206 means 34 units were left over from the purchases in February, and the unit cost was 2,600. Therefore, 34 times 2,600 equals 88,400. So my total is 587,100 plus 88,400. And that is the value of my closing stock. Now remember, this will appear in your statement of financial position. If we now look at question 1.2, use the table provided to calculate the correct net profit after tax for the year ended 30 June 2021. The net profit before tax was given to you. So on your answer booklet, take note that it's given incorrect net profit before tax. If we now look at the adjustments, adjustment number 1, audit fees include 123,600, which was paid in advance for the next financial year. So if it's paid in advance, it means we need to take it out. And audit fees is an expense, so this will appear in your prepaid expense. Audit fees will be credited because our expense will decrease and prepaid expense will be debited. Prepaid expense is an asset, which means that it will appear in your trade and other receivables in note number 5. If we look at the audit fees, because our expense decrease, this will have a positive effect on the net profit. Adjustment number 2. The repayments of the loan are fixed at 35,000 per month, including capitalized interest. So the balance on the loan statement were on the 1st of July, it was given to you, 2020, and then it says 30 June 2021, provide for interest on loan. So if it's given to you in this way, you can always open up a T account and fill in the information which you've got. The balance in the beginning were given to you, the balance brought down. The total repayment of the loan is 35,000 per month, so we need to times it by 12. Then they provided you with the balance at the end. Balance brought down means balance carried down. And if interest is capitalized, you should know that it will always be added to the loan account. So to find out the interest, take the debit side minus the credit side. Interest on loan is going to be debited, which means our expense increase. If our expense increase, this means it will negatively affect the net profit. The third adjustment, rent income. Rent of 74,000 was received from a tenant for the period 1 July 2020 to 31 August 2021. This has been recorded. This amount takes into account a reduction of 750 per month from the 1st of May 2021. The year-end adjustments has not yet been made. So this is a complicated adjustment. Number 1, please take note, there's a reduction of 750 per month. So how do I start? If I look at a timeline, our accounting period starts the 1st of July 2020. And the rent from the tenant has been received until 31 August 2021. Our accounting period ends 30 June 2021, which means that falls outside of our accounting period. And anything that falls outside of our accounting period must be taken out. But now if I look at this, our accounting period is 12 months. So the rent has been received 2 months in advance, which means in total, the rent was received for 14 months. But now I cannot just take that 74,000 and divide it by 14 because of the rent that was reduced by 750 per month from the 1st of May 2021. So if I look now at my timeline on the 1st of May 2021, 21. It means that for 4 months, the rent was less 750 Rand. So to find out what was the total amount, we're going to say 4 times 750, which equals 3,000. Now is the part which you need to be very careful. Because it was a reduction in the rent, we actually need to add that 3,000 to the 74,000 to find out what was the rent before the reduction. So the rent was 5,500 per month. Now we can say 5,500 minus 750, which gives us the rent after the reduction. So remember now, 2 months was received in advance. So 2 times 4,750 must be taken out, whereto income received in advance. Rent income, because it decreased, it will have a negative effect on the net profit. Income received in advance is a liability, so this will be added to your trade and other payables in note number 9. Adjustment number 5. After taking into account the corrections above, it was determined that an additional 85,250 is still owed to SARS in respect of income tax for the year. Which means if I look at SARS income tax, that is my provisional tax payment. Which means that if we still owe 85,250, balance brought down means balance carried down. This means that our income tax for this year, we need to add the provisional tax payment with the balance which we still owe. And that equals my income tax for this year. Income tax is an expense, which means this will negatively affect the net profit. The balance which is still owed, because we owe that, it must go to trade and other payables in my statement of financial position, which is note number 9, or it can appear on the face of the balance sheet. In our next video, we are now going to look at completing all the questions with regards to the correct net profit before tax and the statement of financial position.